All right, guys, welcome to the video. Let's talk about two stocks to help you tariff-proof your portfolio. Actually, a pretty good idea here. If you're looking at a mix or ratio and looking at stocks that could minimize risk associated with having capital in the stock market, and you're looking to kind of shore some of that up against what is arguably, I think, still going to be some rough-ish waters ahead of us as it relates to tariffs, then let's talk about this. And so we're going to take a look at this little clip of video. This is an analyst, a leading analyst, talking about two particular stocks. One of them, surprising, wasn't really even on my radar. I'm going to take a look at as well that could help you tariff-proof your stock portfolio. Here we go.
Today's declines, markets have made a really strong comeback from the April lows, but the tariff back and forth lately is leaving some to wonder if negotiations worsen again, which stocks will be safe. Could any be relatively immune even to the effects of trade policy? Well, here's a hint at a couple of them. Our next guest thinks will be. Skylar Winan is Chief Investment Officer at Regan Capital.
So the one there that was interesting to me was actually Madison Square Garden, and that one, Verizon. I do already own some Verizon, so I was intrigued by this.
Haven't heard MSG in a while. Skylar, welcome.
Thanks for having us on.
Talk to me about that one, Verizon, and more broadly. I mean, does it even excite you to get into these names, or do you just think, no, you got to stay in like the risk assets and let the market be off to the races?
I think staying in yield, high yield companies like Verizon, holding pattern here, kind of waiting out the storm is a great idea. Two New York based companies, Verizon and MSGS, which owns the Knicks and the Rangers, amongst other assets. Just great place to hold out, completely undervalued. But let's take a look at Verizon first. Almost 6 times the dividend yield of the S&P, about a 6.6% dividend yield, 2% dividend riser per year, sub 10 PE. So really,
those are interesting, right? So if you're looking for a dividend stock, obviously 10 PE. Good as well, but a dividend stock, and it is potentially tariff-proof. A good way to think about it.
An anathema versus Mag 7. And if you want to play that value story versus growth, this is one of the best places to hang out. U.S.-based company. Both these companies are based in New York City, and almost completely United States-centric customer base.
I'm going to ask about MSGS, but MBS was another place we could have gone with this argument. Just real quick. So you're basically looking at yield plays then, aren't you? Which is ironic because we're in a situation where you can go, I don't know, I can just get treasury bills for like 4%. I can get the 30-year for 5% these days.
Right. But the Fed may cut here, call it September and December. You're going to very quickly see a 3 handle on Fed funds rate. And that $7+ trillion in money markets, 4 1/4 is kind of like 5, but 3 3/4. I think folks are going to run for the exits and start looking for 5 or 6% yield.
That's a good point, right? So if they cut, that yield's going to go down. You're going to be looking for where you can shift into assets like, say, a Verizon paying you a dividend, things of that nature.
Whether it's in bonds or dividend paying stocks.
Yeah.
We love mortgage bonds that offer high 5s right now for government guaranteed protection in Fannie, Freddie, and Ginnie Mae bonds.
We'll keep buying them so we can get those spreads down. Just a final quick comment then. Why MSGS? What's the dividend yield there?
None.
None.
Earnings stink. Dividend yields stink. But you're looking at a $5 billion company with assets that are worth at least 10, if not $15 billion. The Lakers just traded for $10 billion. You get the Knicks, you get the Rangers, you get esports, you get a bunch of minor league teams. Put that all together for $5 billion. Sounds like a tremendous play, especially with all the hubbub around investing in sports lately.
No, I always find it so ironic that in the private markets, these things trade like pieces of art. Then they go public and like no one wants them. You know, it's just, we'll see if that changes as the asset class keeps maturing. Skylar, thanks for bringing our attention to all of it today. Good to have you.
Well, that was interesting how he shifted and basically said, MSGS, $5 billion company, but the assets outweigh more than what its valuation is, but overall stock's not a great play. So probably not one that I'm going to be looking to put my money in. But the Verizon story was interesting, kind of gave me a better idea and view of that. Also in the capacity of money, flipping money from coming out of bonds, if the Fed does lower the rates. So yeah, it's good stuff. All right. Thanks for giving me a few minutes. So there you go. Interesting couple of takes on potentially how to tariff-proof your portfolio. There are other plays out there similar to Verizon. I mean, I haven't looked at it lately, but like AT&T would be another one I'd be looking at. Very American-centric, could be a potential play like that. So you're kind of your telecom stocks, things of that nature. So you might want to be looking at, traditional, maybe even some railroad stocks, things like that, BNSF, things of that nature. So there's some others that I just kind of thinking off the top of my head here, kind of ad hoc, not bad opportunities, not bad place. So thanks for giving me a few minutes. If you like the video, please smash that like button and hit that subscribe, and more to come later. See you.